Welcome to Money Talk with Michael. I'm Michael Eastham, president of Fellowship Financial Group. Money Talk with Michael is our weekly broadcast where we answer your questions about finance, investment, retirement, and all things related to money. Remember to send in your questions to the email listed in the description box below, and you might hear your question answered on the next Money Talk with Michael.
One thing I have battled with myself over, and I can't seem to settle, it's this. I will retire in a couple of years, and I still have a mortgage of about $136,700. We've paid off all credit cards and auto debt, but I hear different perspectives on whether I should pay off my mortgage. And my husband and I have talked about this and go back and forth. We have plenty of savings and retirement accounts, and our Social Security pension will be more than enough for income. What is your advice?
I'm so glad you asked for my advice on this question, because debt is always one of those questions that comes up in a lot of people's minds. I'm glad you paid off your cars. I'm glad you don't have any credit card debt, but the mortgage tends to be one that's a little bit trickier. And there are a couple of different ways that you can look at it. First of all, from a high level, I always answer this question and I kind of throw it back on you, the client or the consumer. What is your sleep number? In other words, are you comfortable with a payment, a mortgage payment in retirement? If you're comfortable with it, then one of the things that's important, especially if you're in a situation like you where you've got plenty of income to satisfy your retirement goals and you've got investments so that you don't necessarily need additional income. Well, it's better in many cases to control the cash, right? Because once you pay a big check to the mortgage company, then the only way to get that money out is to either sell the house or refinance it. You can't just take that money out of your house. It's not like an ATM. But again, comes back to your sleep number. If you can't sleep at night because you've got a mortgage payment, then by all means, take some of your cash and pay off the mortgage, and you'll get that load off of your shoulders and be able to sleep much better at night. However, if you are in a situation where you're comfortable with the mortgage payment, and especially in today's interest rate environment, I mean, they're so low that the payment is not necessarily a burden. If you're comfortable with that payment and you've got the cash over here, the good news is you're always in a situation where if you got tired of having the mortgage at some point down the road, well, you could just take that cash and then pay off the mortgage anytime you wanted to. But if you're not comfortable with it, then by all means, get rid of the mortgage. I hope that helps. Again, it comes down to a personal decision rather than, am I going to make more money by investing my lump sum? The bottom line is, if you are, probably not much. If you end up taking a lot of risk with it, then you could lose that money and then you'd be in a real pickle. So it's really a personal decision. I hope that helps you make your decision. But if not, give me a call. I'd be happy to talk a little bit more in detail and see if I can help you sort through it. Thanks so much for that question. Thanks so much for watching. Tune in next Monday for another edition of Money Talk with Michael. And don't forget to send in your questions and check out our website at fellowshipfinancial.com and our social media platforms. And if you'd like, you can schedule a 15-minute complimentary call to get your specific questions answered. Everything you need is listed in the description box below.